Good morning, Quasar Markets. You have your main man, Howard Greenberg, here. We're hoping to see Steve in a little bit here, but he's got a lot of stuff going on with the launch of our new platform and everything. First thing we obviously need to talk about a little bit is the U.S. economy. What we are seeing is it grew at about a pace of 2.8% last quarter, a little bit low. So, as we know, GDP is the measure of all goods and services produced during the 3 month period from July through September, growing at 2.8%. The estimates from economists had been looking for an increase about 3.1%. They're trying to get up to 5%, right? So we'll see there what we get out of this. Didn't really move markets all that much this morning. So a little bit surprised, quite honestly, by that. It did bring everything down a little bit. So you can see since 8:30 here, we have seen a little bit of a retracement. We'd sort of been on that retracement though since about 6 a.m. across a lot of different markets here. So I don't think that is just due to GDP. Um, Nikkei was up about 1% overnight. Shanghai Composite down a little over a half a point. In Europe, the stocks down a little bit, about 1%. I think you got to start off with Google in your conversation today, right? Google had earnings yesterday after the bell. Nice raise up here, up about 6% here, trying to push up on that 180 mark. All-time highs about 191.75 there. So a nice move up in general. Um, they did post third quarter earnings and review beats, so revenue beats, excuse me. So good to see that from Google. And my takeaways on Google that I was more interested in was that while search is still number one, it seems that that's um, a little weaker than what you see on the other side of their thing. Cloud revenue, on the other hand, increased about 35% from the prior year. So that was good. That exceeded most consensus calls for the analysts. YouTube's advertising revenue was also slightly higher than estimates. Search revenue did beat for the quarter, but like I said, it was down a little bit, or the beat wasn't as big as expected. So we'll be interested to keep that in mind. Google has been the dominant search engine for more than 2 decades, but with the emergence of these generative AI, has brought a lot of new competition between OpenAI, ChatGPT, Meta's platform, Meta AI. But there could be some risk, but they in general reported really well. Alphabet has been spending big on its own AI technology. They spent $13.6 billion in the quarter, up from estimates there. So they are spending more money when it comes into their own AI. Not surprising there. Their chief executive, Sundar Pichai, cited Alphabet's search and AI efforts in the company's earning release on Tuesday, said our commitment to innovation as well as our long-term focus and investment in AI are paying off with consumer and partners benefiting from our AI tools. So good to see that. Alphabet's still facing some regulatory issues, including the U.S. District Judge's recent ruling that the company has a monopoly in general search services and general text advertisings. So good move here. Just trying to see if there's any levels that really interested me here. If it makes a move through certain things on the daily chart, you can see your big resistance is going to be as you head up to 190 here. I'm probably looking to see if it does a pullback today to like that 173 level before it launches up, if it's going to there. So good earnings by Google for sure. Um, on the other side of that, we've seen healthcare and medical biotech get a little bit of a beat up lately. That's continuing here with Eli Lilly. They are down about 10% here this morning, after they they posted quarterly earnings that missed analyst expectations. They reported adjusted earnings or EPS of about 1.18, $1.18 a share on revenue of about 11.44 billion. Analysts were looking for $1.45 versus that $1.18, and we're looking for over 12 billion in revenue. So, we can see here now down about 10.5% in the pre-market trading. They also gave their full year revenue that ranges now between 45.4 billion to 46 billion, which is down, especially on the top end where they were looking before, maybe at 46.6 billion. They're also looking at EPSs between $13 and $13.50 or so versus $16 to $16.60 previously. So this lower guidance was driven by acquisition charges in the third quarter, primarily related to the acquisition of Morphic Holding. Lilly said, Lilly is one of the most valuable companies in the world, riding their GLP-1 weight loss and diabetes drugs, Zepbound and Mounjaro. So important to look at those. It did said Zepbound's revenue in the quarter was 1.26 billion. Mounjaro came in at 3.11 billion, and those both missed estimates of 1.7 billion on Zepbound and 3.8 billion on Mounjaro. So a little bit down there. I wonder how much of that, they had the shortage for a while. In fact, we know that we'd seen a move up by Hims and Hers, and then a sell-off as they were being allowed to compound the drugs since there was a shortage. So I didn't see much on that. Keep in mind that the stock is up about 50% for the year. And again, if we look at the daily chart here, for me, this starts to get interesting. It just dropped below the 200-day MA on a move back above that 823 here. I could see something in play there. Any rejection there, on the other hand, you might want to look for a downside play. But that is Eli Lilly with a miss. Caterpillar was another one that had an earnings miss. They're down about 2.36% here. Again, another one, though, that had been trading near its all-time high of 403. You can see really fell off here this morning. And the construction and mining equipment company reported third quarter profit and revenues that missed expectations. So if we take a look here, I like to do it sometimes right here on the screen for us. You can see what we're looking at. And you can see they were looking for $5.35, 5.17 on EPS, so a miss by about 3.4% and a miss of about 1.69% on the top end revenue. Their net income did fall to 2.46 billion or $5.06 a share from 2.79 or 5.45 a share in the same period last year. So that's probably why we're seeing this drop. But again, that's not too bad of a drop on a miss here. So one to keep an eye on. Again, Caterpillar is one that also has a little bit of a play with the elections, right? Caterpillar has been making a lot of their vehicles in Mexico, and that Trump has said that he would look to tax them. So we'll see, or not tax it, but tariff it. So we'll see there. Another one that had a real nice beat was Reddit. Feel stupid on this one. I saw a couple of analysts talking heads discussing this one, 2 weeks ago probably, on CNBC or Bloomberg, one of the other news stations. And I said, man, and their whole thing was watch for them to finally show profitability. And that's such a big deal, right? This is a company that has just bled money over time, and they finally turned a profit, and now up 23% here. So this one, man, I just want to kick myself. Sometimes you just get too busy, you forget about something, but and like I said, their EPS moved into the positive for the first time since going public in March. And we can see again, they were expected to lose about 7 cents a share. They made 16 cents, and 11% beat on revenue. Again, advertising, the big thing there, advertise continues to bring in the lion's share of their revenue, about 315 million. Of that, other revenue is, only about 33 million comes through licensing deals. So we'll see. They have Reddit did announce that they have licensed its data to train generative AI large language models for Google's Gemini and OpenAI's Chat GPT. They did have a slight disappointment was daily active users, which came in at about 97.2 million, expected to be closer to that $98 million mark. So, that's sort of what we've seen there. Yeah, man. Like I said, that's one that I just did not see that. On the side of biotech moving in the right direction, BIB, which is Biogen, only up about 1% here. But they did have a net income of about 388.5 million, or $2.66 a share for the quarter, after they actually lost money, 68 million last year, or lost 47 cents a share versus last year. So we see that to be good. Their revenue, though, did fall from 2.46 billion from 2.53 billion. So they did see that move in the wrong way. The company reported positive data from trials for the treatment for lupus, for a treatment targeting TAU and Alzheimer's, and that they achieved an FDA breakthrough therapy designation for a treatment for kidney transplant rejections. So they did have some positive news in there also. Revenue from the company's multiple sclerosis product portfolio did fall about 10%, while their rare disease revenue was up 10%. But that rare disease revenue is only about half as much in their pie. So not much of a movement there. Humana, another one that we know got beat up pretty badly after talking about their issues with Medicare and Medicaid and signups there. They actually did report third quarter profits that exceeded expectations, but we see they're actually dropping here. So as people are digesting their quarterly earnings a little bit more, seems to be dropping. This is one. Again, this one's been beat up. Big Beat made a nice move on this last time we saw it sort of do something like this. So we'll see. Maybe it's in play here. Again, this is a stock that was $527 earlier this year. Now down to $254.50 in the pre-market. Company said third quarter earnings were $4.16. Analysts had anticipated earnings per share of 342, and then on revenue they had a beat 29.4 billion versus estimates of 28.7. They were one of the ones that said their Medicare Advantage membership, which is an important driver for the company, exceeded expectation, and the company now sees annual membership growth of about 265,000. Which is about 5% compared with an earlier estimate of 4.2. So again, tweaking their guidance a little bit. They also tweaked their earnings guidance, saying that they see 2024 earnings per share of at least $16, where they were guiding for about 16. So they still leave a lot of gray area there, don't they, for you to try to figure out what that exactly means. This is another one that you also have to sort of, I want to get through the election before I probably make a move on this one. We know the challenges for the Medicare Advantage will definitely come into play even more so under the Trump administration. For Humana, more demand for medical care from seniors, coupled with the Biden's administration tightening of the government's quality ratings to Medicare Advantage plans, weakened the stock outlook. They downgraded Humana's score there, so that's part of that. So, yeah. So the healthcare, there's not much that could kind of get this buoying too quickly, I don't think. We saw this sell off in general start around the sector after United Health Group, had their loss, bigger than expected there back in the middle of October. And since then, healthcare has sort of been just in a downswing, downswing, downswing. So Humana definitely got hurt there. Let's talk a little bit about chips. Get back to my main screen here. See AMD, another one getting hit early here today after its earnings report. And it just looks like their AI guidance just did not impress people. So, they reported it. Their miss was, they were looking for, 92.3 cents and it was 92 cents. And they actually beat top line revenue. So it wasn't that was off too bad. Their forecast for the current quarter was 7.5 billion in sales at the midpoint of its range, and analysts had been expecting about 7.55 billion. Their CEO Lisa Su came on and said, "We delivered strong third quarter financial results with record revenue led by higher sales of EPYC and Instinct data center products and robust demand for their Ryzen PC processors. They're looking forward, they see significant growth opportunities across their data center, client, and embedded businesses driven by an insatiable demand for more compute." Seen a lot of talk about that demand. And again, now down about 8%. The chip maker's data center unit revenue was up 122% from a year earlier. But revenue in its client PC business was up 29% versus that same prior year. Their gaming business, though, declined by 69%. But they are up 18% on revenue year over year, so not too bad there either. This is one that I'm definitely interested in here. Going to see what happens. Not this one, I don't need to wait on an election. It's more about, does it find support here at this level? You can see right around this 151 area. Should be pretty good support. Got it here on the hourly for a second. Yeah. Yeah, you can see that 152. If I can get a nice, maybe retrace here, bounce back up. I think AMD is one I could take a shot on here today. Definitely one I could. So we'll keep a look there. Let's take a look and see what's pumping here so far this morning. I do have our pre-market pumpers up. THAR is one here that definitely is in play. THAR. Can see here it's already made a huge move up. Retrace back down. It made its secondary move up here almost to the same spot. So you've got to figure 630 is where you got your room to here. That would be my first take profit. So again here, look for a retracement towards that VWAP. I'd love to see it retrace towards 512 and then look for a bounce. I'll put that here on the screen. 511. So that one's definitely in play here. Let's see what happens. It's definitely losing a little bit of momentum, but if it finds a floor here, bounces back from, like I said, that $5, $5.10 area, definitely would be interested in it. Let's take a look at Solidon STI here. STI just broke through VWAP. This one's definitely coming into play here as we're getting into the opening here. Let's see what it does, but this would be one here, 64 cents. This is what I'm looking for, that would be just going to try to make a move back towards that dollar. Has room up to 80 cents. This one looks pretty good too here. Just got a buy in the last 5 minutes on the B4. So STI here, I like this here. Want to see it hold. It is holding here. I'd be interested here. This one might be one to play. There it goes. It's starting. Yep, this is one I would definitely be looking at here. STI. Look for this for a run up to 80 cents right now at 65. About 66 cents. Look for a run for 80 here. I might try to get in on this one. Let's see if we can get in here at a good spot right at 65 cents. I like it there. Okay, I'm going to try to get in here at 65. Did not get my fill, went a little higher. See what Therion's doing. And I like this on that retrace, so keep an eye on that. There it goes, STI. 66. I did not get a fill there. It went on me. So I did not get a fill there. Let's see what we've got. As far as the other one I'm looking at. STBX. This one is blowing up. That's in the wrong direction now. ASPI. This one's definitely in play again. Another one here. This one will be interesting. I think you got to lay this one out a little bit longer because I'd be looking to see if it retraces towards that 786 area. If it did, I would definitely be interested in it there for maybe a nice little bounce back, but not seeing that move here yet. Okay, here's one again if it can get through. Here I want to see, this isn't too bad. HAO here is one to keep an eye on. HAO. I'll put on here what I was looking at. So on this one, like I said here, we move through VWAP and see a confirmation move above 30 cents. Your first stop would be 35 here, and then you go from there. So we definitely got a couple that are in play here. We're about 5 minutes from opening. STI might give me my chance still here. Let's see what happens. Definitely liking the look of that STI. So, okay, let's get. I have that on my board already. Let's bring that up to the top here. And HOA. Those are the two most that I'm watching here so far. Let's see here. Okay, let's see what we have going on here as we get 5 minutes from open QQQ down about almost 0.2% here. SPY pretty flat here so far this morning. Gold did hit a new all-time high, just challenged that again at 27.89. So gold looks like it wants to try to break 2,800. Silver had gotten above 34, but we're seeing a little bit of a sell-off here on silver. WTI back up about 1.5 here. You know, it does look like oil is trying to find their footing. You know, we've seen 7-week lows this week. on the price. It's been nice at the gas tank. I did look up to see what was going on there, and what we got some analysts is saying that WTI and Brent ended Tuesday's session at the lowest for front month contracts since early September, as news reports indicated Israel's prime minister was set to meet with political and military advisors to discuss possible diplomatic approaches to address the fighting between his country and Hezbollah. So crude dropped more than 6% Monday after weekend strikes we know that Israel had on Iran. Diminishing geopolitical worries have put the focus back on concern over the demand outlook, particularly for China, the world's largest crude importer. Meanwhile, the Organization of Petroleum Exporting Countries and its allies are scheduled to begin unwinding the production curbs next month. Lingering geopolitical uncertainty surrounding Israel's continued fight with Iranian proxy groups in the Middle East is likely the sole reason that WTI crude oil futures have so far held above the key support band between 67 and 69 this week, said a Stevens report research this week. Storage data will also be in focus. The American Petroleum Institute announced late Tuesday that U.S. crude inventories fell about 573,000 barrels last week, according to a source citing the data, with gasoline stocks down 282,000 barrels. So it could be interesting to see if we see a reload at these lower levels, and that's why we're seeing this nice little bounce here. I don't know if you guys saw, did you see Schwab is going to vastly expand its 24-hour trading for investors? So the brokerage firm plans to add stocks in the S&P 500 and the NASDAQ 100, as well as hundreds of exchange-traded funds to the securities available for trading 24 hours a day, 5 days a week. Currently, it only offered a few dozen ETFs, SPY QQQ, and a few others. That the changes are going to be rolled out gradually. They said they come in response to increasing demand from domestic and international clients, said their head of trading. We've talked about this, right? The New York Stock Exchange is going to have its digital version. ARCA, they're going to trade, from 1:30 in the morning is going to be opening time. They're going to about 22 hours a day, but 222. We know that Robinhood added 24-hour tradings for select stocks and ETFs last year. And Schwab just noted that TD Ameritrade, which it acquired 4 years ago, had launched 24-hour trading in 2018 for some ETFs. It was the first U.S. broker to do that. So Schwab is looking to build on that legacy. I think it's interesting. I don't know if it's good or bad. I'm used to 24-hour markets in the world of crypto. I still think that you find that most of them most trading tends to get put down into the same hours, though. Let's see here. Okay, I did get my fill here on STI, so I got in at 64. We're at 65.19 here. So we'll definitely be keeping an eye on that. I'm not going to set any stop loss or take profit yet. Actually, I am. Give me 1 second here. I'm going to put in a stop loss at 55 cents. Okay. It's trading at about 65.76. Again, I'm going to put in a take profit also here. I'm going to do that. Oh, that's moving the wrong way on open here. Let's see what happens. There we go. Here we go. We are open. I got 80 cents here. 79 is my first profit on this. Let's see what we get. We are open and we are moving in the right direction, just past the VWAP here. We need to see it go. Let's go right here. Let's see if we can get the bump on it. As I look at this, I do see tick negative about 231 here as we're open. I am seeing QQQ opening up down around 0.2%. SPY at about 0.12, so we do see them moving down slightly so far. Bitcoin at 71,800 did get up almost to 73. Didn't quite get there. I was off. I had said we hit 73 yesterday. We hit 72,985. So I feel terrible for myself. Here we go. 66 cents. Let's go. Come on, STI. Let's take it to the money here. Let's keep me on the win streak. Keeping an eye on that again. STI. As I look at where things are opening up, Apple down about 3.37%. Seeing AMD down almost 9% here, so it's getting a little bit of love here as we open up. Amazon has a nice move up here, 2.17% so far this morning. Keep an eye here. Boeing, we've talked a lot about Boeing right at 154.50 here, so up about 1%. So Boeing moving back in the right direction. As we look in China, BABA down about 1.79 here, Baidu down 2.07, so Chinese stocks seem to be getting hit. Yep, JD down about 3.69. If I take a look, NEO down about 3.21, and PDD, which is TMO, down about 3.69. So we do see us getting hit here. I'm down a few pennies here on this, still moving okay, still sticking pretty close here. Didn't get the pump that I was hoping for at the beginning at the thing, but still in this trade, still feel good about it. Would need to see it break below that 55 level, and at that point I would stop out. VIX at about 1978. See if Lily is moving back at all. Not really. Nope. No real move there. Caterpillar down 5%. Seeing if any of these pre-market ones that had dumped start to get a little bit of a floor. Not seeing it on Caterpillar yet. Brinker with a nice move up this morning. They had a pretty good earnings beat. They were looking again, Brinker in International, Chili's, and other restaurants. They were looking at 68 cents for their estimate, came in at 95 cents. And then on revenue, they had a beat there too. So we are seeing that casual, first tier of sit down dining had a good earnings there. Not bringing up anything with it that I've seen so far. STI just jumped to 67, 67, 88 here for me, 68, 68. So it's moving in the right direction. This gets seen by a few people here. The volume should start to hit some scanners. Could see a nice move here. 66, struggled there to get across that 68. Let's see what we get here. It is trying 67, so moving in the right direction. It's trying. I feel good about this one. Let's see what comes out of it. I was watching HAO here. That then didn't come back, and that fell out of the bull. That fell out of what you were looking at here for your bottom of a bull flag. So HAO sort of gone. Steve had mentioned GLYC yesterday. Let's see, it's trying to move up here this morning. Just got a buy on the the B4. Taking a look here at the app, see if we've got any halts or anything yet we want to take a look at. TMTC just got stopped. TMTC. Well, it's not really in the right direction. SAG. That's it though. SAG also got stopped. Let's see what's going on there. SAG Holdings stopped to the downside, so you don't want to see that one. Eli Lilly continuing to drop here, now down 13%. That's one I think that could be you could look to make a move on here. Reddit now up 33.83% here. Reddit 33.83%. So up another 10% since we opened here. Still looking good even on the 3-minute chart here. That could be a runner today. You know, we saw Tesla with the big run the other day. Some of these can move, and Reddit definitely gets the Reddit crowd behind it. Garmin, another one up 15.94% after a nice earnings beat. You can see that huge gap up here this morning. Snapchat, another one that had a nice earnings beat, moving up here this morning, up about 11.5%. Trying to get a little run going here again. It was up as high as 12.45. Looks like it wants to make a run back up towards that level. Excelsius Health Technology on earnings report, big gap up, now up 12.39%. Another one that's looking great here, even on a short-term chart, continuing to show strength. On the other side of that, QRVO down about 26%. I did have some notes here on their earnings reports. So they are a company which makes radio frequency chips for connectivity in Apple iPhones, iPads, Apple Watches, and other wireless devices. They actually had a beat on EPS. They came in at $1.88 when it was $1.85 is what they were looking at. And the revenue was at 1.05 above the consensus of 1.03. Looking forward, the flagship and premium materials in the smartphone market are holding up well. However, content and ramp profiles vary by model, and they're experiencing an unfavorable mix. The CFO said in the earnings release they expect that to continue in the second half of fiscal 2025. So it sounds like their chips get used in the well, let me see what they said. Management's commentary didn't sit well with analyst Cody Aker, who downgraded shares from hold to a buy and removed its price target, citing less than expected leverage to Apple's new iPhone 16 family and a pervasive and persistent industry shift away from the more profitable mid and peer tier headsets to the more value priced entry tier models. So they make the chips for like the Pro and the better models, and that's what's suffering. So we'll see here. STI has been able to make that run for me. Still in the game, sitting at about 63 cents, right about my entry there. Actually, 64 is my entry, so down about a penny there. We'll see what happens. Tick now positive around 284. But we still see SPY over the last 9 minutes, still in decline. QQQ, same thing, been declining for a couple of hours here. So we are seeing a little bit of a broad sell-off across the markets here. Bitcoin back down at 71,602 fading. This is the one where, again, I don't understand why everything's fading together. You know, gold's fading, silver's fading. Although they're looking to find, they seem to be finding a bottom here. Is Bitcoin finding a bottom? Not as much. Bitcoin's still fading. Oil's holding up pretty well. Merck down about a point, almost. Micron down 2, so chips getting hit here. Nvidia down 2%. So AMD's reports seem to bring everybody down. Qualcomm down 3.3. Whoa, SMCI down 32% here. SMCI. Looking for any news there. I don't see any news. Oh. Their accountant resigned. So SMCI. SMCI. Wow. Ernst & Young's resigned as its public accounting firm over a month after Heidenberg alleged accounting manipulation. I did get a note from Big Beat. He is interested in a longer term pickup here at this price. So it's given back its entire gains of 2004. 2024, excuse me. Wow. My STI is not doing much movement now here. It's right at that 63 cents or so. Fell back below VWAP a little bit, just broke back through it. So it's still going. It's in the game here. We'll see what we get. I'm in at 64 cents. Just hit 65. Come on, give me a run. Doesn't seem like it wants to so far. Lilly now down almost 14.2. So again, these ones that are getting beat up, they're not finding a floor yet. Caterpillar does seem like it's found a floor. Trying to move back up. Those wicks actually give you a pretty good signal that this one might be in play to the upside here today. Could see Caterpillar kind of try to fight its way up to that 387 level. Reddit's still up 33% here, 108.80. Riot has earnings later today. We'll see what comes out of that. One of the Bitcoin mining companies. So I definitely have my eye on that. Google now up 5% here. You can see it's retraced a little bit. Humana now up 5%. So Humana, man, I said that. Didn't make sense. It had good earnings. All of its reports were pretty good. Why they weren't moving to the top side. See what we got here. Let's take a look at the screener here. SAG was just stopped again, so that's the second time. Or is that still the same one? No, 939. This should be coming off a halt here. SAG. Halted twice to the downside. Wow. Never mind there. Don't like to see that. Halted the downside twice. Most of stock twit here talking about SMCI. Try to see if they got anything else they're really talking up there. Not really. A little bit about AMD, some Google. Not much. THAR still holding up here. The other one that I said would still be in play here, THAR. So far, VWAP holding up. You get a nice bounce off of that VWAP. Definitely one that's still in play. STI doesn't seem to be doing too much here. That's all that great for me. We're still in the game though. Tesla down about 1% here. Snap now up 12.3%, so it's getting a nice little love here too. Snap and Reddit moving up nicely. Garmin now up almost 20%. Another one's flying here this morning. Garmin up almost 20%. We are 15 minutes into the trading day here. There are definitely some pumpers moving around here after earnings. Delta up 1.34% here, making a nice move this morning. So Delta moving up nicely here. Dell Computers moving up nicely also. Dell, since entering the S&P, had really sort of moved down after that big gap up here when it got announced into the S&P. And now you've seen it sort of sell off and working its way back up. This is a decent looking chart too. I sort of like this. Got a pretty good bottom trend line. Still in place. That's a pretty good look. Dell not looking too shabby. Dell not looking too shabby there. Trying to make a run today, up 3.86%. Micron getting hit with the rest of the tech sector here, down 2.31%. Mara back down at 18.28 here. So again, did break through my target there at 19.16. Took profit there, and I'm out of that trade. Bitcoin cools off a little bit here. You could look for a retracement here back to that 1667 level again, or even down towards 15. Pretty much all of the Bitcoin mining stocks getting hit pretty good here. BITS one that I wanted to get into here. This could be a good opportunity for that. BITF, which is Bitfarm, is one I'm keeping an eye on here. Broke out of that downtrend. I want to see it hold, get above that 200-day MA. ASP a pumper so far this morning. THAR we've been talking about. Hasn't made that move yet. Okay, we're going to take a quick break here. I am back at 10 o'clock with our man, Mr. Currency, Stephen Flanagan. But I'm going to take a couple of second break here to grab a quick drink.
There we go. How's that? Okay. Sorry about that. I'm ready. Okay.
Okay, I am back, Quasar Markets Live, with our man, Mr. Currency himself, Stephen Flanagan. Big day, Stephen. How are you doing today?
Yeah, I'm doing really good, Howard. Good morning, and it is a an active day. And you know, as we've been saying, the markets are so stretched right now, and that's across all the products. It the bar is so high to get the markets to continue.
Right.
Hence the sudden sell off today that you're seeing in virtually all the marketplaces. In particular, you're seeing the Dixie back down to 104.20, coming off a high here
Yep.
of 104.35.40. So, you know, um, the bar is high. If you want to get more news to get us moving, it's going to be difficult. And I'll emphasize that by if you looked at the headlines today, European zone GDP surprises to the upside.
Yeah. Yeah, it's a big surprise though.
Point four.
Yeah. I
You know,
mean,
it's
that is glacial pace, as they say, right?
yeah, from an old theory that we always had, you needed at least 2% growth to maintain your economic system. In other words, people hiring, leaving, retiring, the whole growth system, tax revenues, um, it all required 2% growth. And so the US is still out there, headlines again, trying to stimulate activity.
Right.
The US dropped to 2.8%. I mean, come on.
Yeah. Were you surprised that it came in a little low? Were you sort
No,
of? That's I didn't think so.
no, not at all. That's still strong growth compared to the rest of the world. And there's a number of factors underneath here that are beginning to turn, and people are beginning to acknowledge them. You mentioned on Monday, and Steve, all the top people with a lot of market experience saying, you got to look out here. Markets are a bit overextended. And I
Right.
think everybody's beginning to pick up on subtleties in the marketplace right now.
Now, with that being said, though, the definitely earnings are pushing certain ones up. We've seen some real nice moves up today. Google, Snap, Reddit, and others. So, it is a stock pickers market. I will still say, at least we're seeing today. But like you said, treasuries were dropping, gold was dropping a little bit, silver was dropping, Bitcoin was dropping, and the indices were dropping. So again, the same way that irrationally on Monday when we talked, everything seemed to be going up together. I guess right now, whatever goes up together, it comes down together. It's all only one tide. There's not a lot of different tides going right now.
And for a trader today, especially let's for your audience, with computer models dominating most of the trading, some sort of an algorithm, even when you hit the button as a person to say, I want to buy, I want to sell, that goes into an algorithm. And these algorithms are at play and they're in perpetual motion. So when they get overextended, it's very quickly that the weighting will reverse. And the correlation trades,
Right.
and that's the key word. They watch all the markets electronically, and every single one of these markets has a weighting that goes into the model, and it fires off orders instantaneously within milliseconds
Right. Absolutely.
across all the markets.
When we break down Eurozone a little bit, I was interested. Germany actually showed a little bit of growth, which we weren't expecting. They had been really beat up. Is this the start of a turnaround there, or was this just a simple blip, you think?
Well, I think most people would like to hope that it's a turnaround, but I think that Germany has its bureaucratic problems that have happened over time, and they've got a lot of sorting out to do. So, I mean, if we're going to start championing, a surprise 0.4% growth as as a turnaround. I don't think so. I think if we look at Germany, we must look at the total eurozone picture.
Right.
Inflation is under 2%, and suddenly we're hearing, because of this glacial increase in GDP, that the ECB may not be willing to cut now.
Right.
You know, inflation is underneath of the forecast. Interest rates are too high. We're seeing global cuts in interest rates for a good reason.
So I'll spin on that right away and get to our Fed. You know, we'll be here in 8 days. We'll be hearing what goes on there. When I woke up this morning, it was 99.6% towards a 25 basis point cut on the Fed watch. It's moved down to 94.7. Does that surprise you? Did change your mind? Do you think that they stay standard here, or you still think that we get a 25 basis point cut?
I believe we still get a 25 basis point cut. The 50, was a kind of hopeful. I don't think that the Fed members, remember, these Fed members are not market participants. They are academics, except for, I think, two of them. And
Yeah,
Powell being,
Goshley is pretty comes from the business side.
that's right. The guy I always watch is Goolsby, and this
Yeah,
guy is really plugged into today's markets. And, if inflation is low, he's basically saying we need to move the bar and get interest rates down. I think, and that's summarizing, basically his view. Um, I think the Fed cuts. I think ECB will cut. But more importantly, now we have Bank of England on this,
right.
ahead
They're
of.
on today, right?
No, that's November 7th as well.
Okay,
Today was the UK budget that
there
came
you
out.
go. Okay.
And you go out and search engine your UK budget, and that you can paint this any way you want. But they surprised us with a 52 billion US, 40 billion sterling plug tax rise to their finance hole. Now they're immediately saying, "Hey, when we came into government, we noticed that the previous administration had a horrible, and you could say whatever you want, but when you begin to break this down as this news is coming out, inherited pensions now get included in tax rise, air passenger duties now get go up. They have they don't call them taxes, they call them duties.
Duties,
uh,
yes.
they're all going up. So we're not going to raise taxes on the middle class. That's the everybody's mantra. But yes, they do, because every
Right.
fee that everybody pays goes up.
It's
So
just a different tax. Same thing with tariffs. You know, when we start talking tariffs, tariffs are just a tax. It's a,
it's
you know,
just a tax.
no other way to put it.
Yeah, and so GDP in the UK is at about a 0.5%, and that's overall they're looking at a 0.9%. But you can slice and dice this any way you want. They are raising taxes by 40 billion pounds, and that is going to be a drag on their economy. So I expect the UK to go a 0.5% cut if the Bank of England wants to get out in front. If they don't cut, you want to, with two hands, I'm looking to sell sterling.
Wow. Okay. I like that call right there. You heard it here. I don't have my sterling chart up. Give me 1 second to get there.
Right now, we're around I think the one,
$1.30.
yeah. I kind of feel that if we get below a 129 figure 10 level, that's really the point where the ice begins to break. And then I would be looking for setting a target around 126.80, 127.20. But again, the markets are very overextended. The dollar index has been very overextended on the upside. We've talked about this. And so you're seeing a natural move back in that. You're seeing interest rates, you're seeing stocks. All the markets are giving a pullback right now. And
Right.
so you may see a good opportunity ahead of the November 7th Bank of England meeting to look to sell sterling in around the 130, 50, 80 zone there, and
I mean,
position
this
yourself.
chart's definitely screaming that if it can't break through, we had talked about this spot over here that it had to get back through, where it fit. What was our key support back in September has become key resistance. And then, like you said, if it breaks down through that spot right here, where we saw a little bit of support here in July, you're looking back down to these levels down here towards that 126.
Right. You know, and you're always looking for things on the horizon,
Right.
and that would be what happens if suddenly the CPI numbers begin to reflect. Remember, oil had surged during August, September,
Yep.
right? And it's only started to come. So what if the oil price surge now begins to factor into these CPI releases?
Well,
Tomorrow
will, yeah.
you tomorrow you have Eurozone and US, the big key figures that they watch. What happens if these tick up? Interest rates are going to naturally have to reprice in no Fed cuts, no cuts, and surge higher again. And now you end up in a situation where higher rates and economic growth is just getting up off the floor in the UK and Eurozone, and suddenly it's going to snuff it right back out.
Right down.
And this now becomes a huge policy dilemma as we move into the fourth quarter here in trading.
And do we see a little bit of what we've seen in Japan, where will there start to be more, negative views from the public there because it's just more of the same, like you said. They came in with their strong mandate, we're going to do X, Y, and Z. Japan, when they had their change in leadership, remember they came in and said, we're going to do this. And then all of a sudden they realized, hey, it's not too with that. It's not as easy as it sounds. And then when they start to pull it back, we see
Right.
sentiment usually drop pretty quickly.
Again, in Japan, it was kind of a unique situation. One part of the uniqueness is the LDP has controlled politics since the 50s.
Right.
That's 1950s. And
Yeah.
that's only recently changed because of a scandal. So, I wouldn't, in Japan, they are very much of the opinion we're not raising interest rates until we see wage growth. Remember, they're fighting 20 plus years of deflation.
Inflation, yeah.
So, they've got the patience to let outlast this. So I actually look at them. Remember, while the rest of the world raised interest rates in the fashion that they did during 2023, Bank of Japan stayed at minus zero point 0.1, saying this move up in interest rates, inflation is not going to last.
Right.
And
It
so
was a
they held
temper.
firm and they were proven right. Now the rest of the world is suddenly going, wow, we went way too far. Growth rates have cratered and now they've got to maintain. So that's why we're in a world where interest rates are now going lower to find some stability, whether that in the US to use 3.5, 4.5%, somewhere in that zone will be the new base of our interest rates.
That was the next question I was going to ask you is if the Fed does go down, what do we see? Because, quite frankly, we're at 4.2, the same as before they cut a half a point on the 10-year. So, what is it going to take to move that needle? Do you think another quarter point does that?
Well, now you bring in the headlines. GDP wasn't as strong as expected, right?
Right.
So suddenly that begins to be the fuel that I think that the move up in interest rates presently, and that's globally, is overdone. This would be
Okay.
good levels in which to lock in probably interest rate type plays because these are high levels. I
Yep.
think overall you're going to see interest rates begin to come down as the reality of the slowness in economic growth throughout the world continues. And keep in mind, this wave of stimulus that has already been enacted globally is beginning to move for more and more to the forefront. So I do look for interest rates to continue to trade lower, and supporting economic growth throughout the world because that has kind of stabilized at slightly above zero.
Right. So what we're saying to our viewers here is if you're looking to buy duration, get it now before it's gone. That's what Steven's saying. So those of you like my mother-in-law that are looking to put their money into money markets or CDs, get to your banks, while this is, because like you said, like anything else, it's going to be the mean reversion, in my opinion, too. Is there was a reaction today that was maybe a little bit overblown. We jumped through that 4.2, almost a 4.3. This would be the time to look at that. So I love that. Treasury auctions are this week also, right? Are you looking for anything there? It's been all over CNBC, so I guess it's got to be important.
Got to be important, right? Well,
You like that
you
dig?
know,
I'm pretty good at those.
yeah, you that's good. But when you start talking about auctions, the world has got their three-quarters of their homes papered, wallpapered with US debt, as well as other countries' debt. So if you're looking to get people to buy more debt, which we are, then rates have to tick up. And that's what we have been seeing.
Right.
You've got to make it more attractive for people to want to invest here. And so, hence, you're seeing that uptick in rates. And that's why I say these are levels that will not be able to be sustained. And this is a good level to lock in these higher rates because
Right.
they're too high. Um, Inflation is moving back up because anybody who looks back knows that oil prices have been
Yeah.
higher in August and September.
Yep. Yeah,
So
absolutely. It's interesting there when it comes to that, whole concept of these interest rates. People get so tied in and think that things happen the next day. Again, and that the new normal might be, like you said, 3.5 to 4% is probably what we're looking at, where we lived for a long time, right? Didn't, there were, we only really went to this, zero rates during COVID.
well, Howard,
Well, actually, before COVID, it was
yeah,
at the 2008.
now you're beginning to make me feel old because now I have to reflect back in my personal experience coming out of Paul Volcker's era when interest rates were forced up. Prime rates were 18.5%, market rates went up to 20. And I can remember many of the people when I entered into the financial markets, them telling me that the the lowest interest rate you'll ever see would be 3%.
Right.
So then we came all the way down.
Take that into account. We went, to zero,
Right.
and we stayed there
So
for a long time.
somewhere between, let's bring it up, 3.5, 4.5% is probably a very stable interest rate, which will support economic growth and maintain lower inflationary environments. And that's probably somewhere in the zone. But I'm looking at the marketplace from that experience from 1979 to present. So
Right.
it doesn't happen overnight, but I think that that's where things will probably look to stabilize in.
Well, I think that's important. Again, as I said to you, I wasn't of that philosophy because I hadn't really had much background in, what does the interest rate do. I've spent most of my adult life in it very low. So, realizing that makes, is important to our viewers because it means, again, for those of you that are looking to buy homes and think that we're going to go back to, a 1% or a 2%, we're probably not going to get there. The new norm is going to be in a rate that makes sense because it gives room to both sides. Again, what the Fed did before, right, is they sort of put themselves in a box. They couldn't go up because they didn't leave room for up and down. So there was no movement. They weren't going to go negative. We weren't going to follow Japan, and it doesn't leave you much room. So this hopefully at that 3% gives a little bit more to the toolbox of the Fed, I would expect.
I would agree with you 100%. And again, another personal experience I'd like to share with you. In 1981, 82, my chief dealer had decided to leave. And as he was walking out, he turned to the entire dealing room and he said, "Here's my last thing I'm telling you. Put all your money into a 30-year bond." Now, you could have locked in 16, 17% at that time.
That's it.
So,
Yeah, that wouldn't be too bad. That would,
right.
I know a lot of people that would be happy with that.
When I left the dealing room after a 43-year career recently, 2.5 years ago, I turned to everybody when interest rates were at zero and I said, listen, This is a historical anomaly. You'll never see this again. Make sure you lock in every single one a fixed interest rate mortgage,
Right.
because
Absolutely.
you must take advantage of these anomalies. And now presently you get the first move off of zero to presently wherever we've topped out, call it 5.5%, in mortgages up over 7%,
Yep.
and now you're getting that move back down. So I would think mortgage rates 4.5, 5.5% will be about the low. And that, in a historical point of view, is an extremely low rate.
Right, and that's what people don't realize. Although, unfortunately, that you can skin 1,000 different ways too, because the acceleration in home costs has skyrocketed much more than employment and wages have. My dad bought a house for $10,000 back in the early '70s in the suburbs of Boston, and now you're looking at $500,000 for that entry. So it's that's where it's tough. We'll see what happens. That's where the elections, will make a big difference as to what their approach probably is to how ownership. I think that's going to be a big generational thing. Is how do we approach ownership, home ownership, over the next generation here, because it's becoming more and more difficult, and you see more and more of them that are, of the younger generation that are willing to rent. And I can tell you from experience that is not the way to go. Um,
No,
you know,
no, and but what your point is that, and what we've kind of highlighted with overextended markets today, you're seeing all the markets reversing. We have an election in a week, and the parallels or the differences of opinion as to how they will approach the economics of this country, well, are somewhat different. And so the market reaction based on those results, and I've been trying to highlight this, having traded through the 2016 shocker,
right?
some of the most explosive markets in my 43-year career that I could highlight.
Yeah.
So the chances of this potentially happening once again are quite real. And just look at the UK as an example. We had a recent election with a complete landslide in its results, and now you're seeing the results of a 40 billion pound, that's 52 billion US, increase in taxes.
Right.
This is going to create a slowdown. um, the problem is that the political world seems to, at least if we look at Europe and the UK, they accept stagnant growth of zero point 0.5 as growth. And
Right.
again, that just doesn't seem to cut it in my economic textbook.
Right. No, for sure. It's almost like when it's the moving needle of the recession that we saw for so long, right? Is it GDP down for 1 quarter, 2 quarters, 3 quarters? No, no, and now we got to change this number and move that. And it's the same thing like we see with so many of the different CPI, PPI numbers. We're going to strip this out, add this, take this off. We don't weight this. So it does become very confusing. I think that's part of what they want. So that, it makes it a lot harder for anyone to get a good feel there. Do you see any plays as we do get to the U.S. election? Volatility is expected to go down next month. If you look at the forward-looking VIXs, they really drop down. If you look at implied volatility across stocks, they really drop off. After the election, is there a play in currencies on volatility? That's something I don't know.
Volatility is going up. And
Okay.
anybody who thinks that a simple election is going to, the world has been splintered because of interest rate differentials throughout the world. We highlighted this a week ago where we said it's every man for themselves.
Right.
And I would just simply use as an example, look at the countries cutting interest rates and those that are not. Australia says, no, we're not cutting because inflation has ticked back up. Meanwhile, in Europe, they surprised everywhere with a 0.5% cut. Look at Bank of Canada. They've been cutting successively now 4 times. Next thing we're going to be looking at is some of the perhaps Latin American countries beginning to cut more sharply, such as Mexico. So everybody is taking a divergent path, this is only going to lead to an explosion of volatility in the currency markets. We're already seeing that in our domestic markets here, equities.
For sure.
I don't think that volatility is going to, just because an election is out of the way, unless somebody has a crystal ball and can figure out the proper economic policy to sustain growth and employment and keep inflation low. I have not seen any politician have that crystal ball yet.
No, not at all. Not at all. Before we go, I've got one for you. You know I like to give you my Bitcoin news of the day to kind of get you. I'm gonna get you orange pilled in no time. You're gonna be the biggest
Yes.
Bitcoin maxi ever. Did you see the government of Bhutan is selling $66 million in crypto? What's interesting there is in Bitcoin, they
Yep.
didn't get that from seizures. They actually have a fully green Bitcoin mining facility because of their huge hydroelectric resources. So, again, I'm interested to see. We saw the BRICS, and I do think this is a big part of why BRICS is so determined to put Bitcoin mining companies or Bitcoin mining facilities in all of these countries around the world that do have this stranded energy, because it's something that I've talked about for years. Is there's so many places where countries in the IMF and World Bank have spent billions of dollars building electrical supply, green energy, hydroelectric dams, in Paraguay and Colombia and all these places where the energy stranded. It has no place to go. So I think it's going to be interesting. And I'm telling you, one to keep an eye on as BRICS continues to go over. I think that they really are going to try to become a major player in Bitcoin mining across the BRICS nations.
No question. One of the things that I always would have on my desk was be flexible.
Yeah.
So, an old timer like myself looking at this new generation of Bitcoin and crypto space, yes, I acknowledge that there is a demand out there for an alternative source of a medium of exchange, whether that be, any one of these cryptos. So, and the BRIC nations have been moving into this space. There's no question about that. Somewhere in the foreseeable future, there will be a merging between the present free floating currencies and the crypto markets in some form or another. I would see a blending of those worlds, because
Yeah.
there is a demand out there for a new medium of exchange, particularly when we talk about the debt levels that the present system is anchored by.
Yeah, well, we'll have to talk next time. I'll get you some figures. I'll send you on what El Salvador has done and how they've taken that country, which was one of the poorest, if not the worst, in all of Central America, and have now made it one of the strongest through the use of their adoption of Bitcoin. But this one was more interesting to me because this wasn't buying Bitcoin every day like they're doing in El Salvador and using funds. This is actually taking excess energy that was stranded just sitting there at this electro power plant and then turning it into what now is $66 billion for a country that can use it.
Yeah, yeah, interesting, very interesting. Thanks, Howard.
No problem. Well, thanks for all of the information. I'm going to be watching that Sterling. I love that call out there. Definitely one to keep an eye on. There's nothing more anemic than what we've seen out of the UK. So I have a feeling like you're saying that we're going to see that in the 7th or 6th or 7th and be ready for it. So again, thank you so much for joining us, Stephen Flanagan, our Mystic Currencies here at Quasar Markets.
Thank you, Howard.